Hey everyone, I'm Lewis and welcome back to my YouTube channel. In today's video I'm going to be going through my top tips for beginner investors in the UK and things you should look out for when looking to invest. If you haven't already, please subscribe to my YouTube channel and leave a like and a comment on this video. I would really appreciate it, and it will do wonders for me, for the algorithm, and getting my word out there in the investing community. This is not a recommendation. Lewis Harding and his investment portfolio, his holdings and any related buy or sell decision are not a recommendation to invest or not invest. Lewis's videos, online content and investment portfolio should be seen as a source of information and education only. You must always do your own research, make your own investment decisions and seek a regulated financial advisor if you are unsure of any investment. So tip number one for me would have to be pick a low-cost broker/platform. Your fees on your investments will compound over time, and it is essential that you get your fees correct to start with. As a rule of thumb, I always say 0.5% or below is what fees you want on your total investment pot. Anything above that, and the studies have shown that this can really be at a detriment to your investment portfolio if your fees are too high. So some platforms which are very low fee based on what you want to do. So number one for me would be Vanguard. If you are just wanting to invest in purely index funds, there's no better place than Vanguard in my opinion. They have a flat fee of 0.15% across all of their accounts, and then they will have individual fund fees, but they are minimal because they are index funds. So Vanguard are well known for having very low fees, and they are very well respected for this. So well worth checking out if you just want to passively invest into index funds. Number two, so if you want a combination of investing in the stock market, in individual stocks and index funds, ETFs, then there's no better platform for me than Freetrade. I've been using Freetrade now for a good 18 months, and I have my ISA, SIPP and other investments with them in the general investment account. But yeah, Freetrade a fantastic platform where the ISA is £3 per month, the FX fees on buying US shares is minimal, it's 0.45% per trade. So a very low cost platform, and they are very transparent with their fees. Literally go onto their website and you'll see everything, and that's it. Pretty simple really. So the next platform would be Eureka. So Eureka are a platform where they invest your money for you based on portfolios, based on how long you want to invest for, and you pay a flat fee per month, and that's it. If you want to invest for 5, 10, 20 years, they take care of it and they invest based on back-tested portfolios. So Eureka are a new platform, and yeah, if you want your investments managed for you, I would say Eureka are the place to go. So that's it for low-cost free platforms. I think in summary on this, keep your fees as low as possible compared to your investment pot size, and then it will benefit you in the long run much more, keeping your fees under control and as minimal as possible. So my next point would be invest through a tax advantageous account. And in the UK, the two most tax advantageous are ISAs and SIPPs, self-invested personal pensions. So I invest in my stocks through an ISA. The main reason for this is because any capital gains made within this ISA, there's no tax to pay. So the most tax efficient you can literally get, you're not paying any tax. So I have my ISA with Freetrade. I pay £3 a month for my ISA, and as my investments compound over time and hopefully become a nice amount, I won't have to pay any tax on the gains within there, which is absolutely fantastic really when you think about it. For the minimal cost it is, it's well worth doing. And I always think if you are planning to invest for long term, start off by using an ISA. You have 20 grand you can put in a year in an ISA. For most people this is more than enough. And yeah, ISAs are fantastic, underutilized product in my opinion, because they're very tax efficient. And let's go on to SIPPs. So SIPPs, self-invested personal pension. This is basically a separate pension pot for you. You can have workplace pensions called SIPPs as well. But let's talk about Freetrade SIPP, for example. So a SIPP is a pension account, so you can't access the money till 55 in the UK. But yeah, the reason why these are very tax efficient is because when you put your contributions in, the government will top up with tax relief, and as well, any gains within there are not taxed either. So you can have a nest egg grow within your pension pot and nothing's taxed. The only time you are taxed is when you start withdrawing, and when you start withdrawing from a pension, it classes as an income and you'll get taxed at whatever your income tax rate is. So yeah, tax efficient accounts are a very, very good way of saving money over the long term with your taxes. And I always go down the route of invest through your ISA first, and if you are lucky enough to invest 20 grand a year, then move on to invest in your SIPPs. Each individual person is different though, but I always think if you invest in the stocks and shares, I think it's a no-brainer investing through an ISA to start with. So my final tip for anyone wanting to start investing in the UK, I would say starting off with a low-cost world index fund is a great place to start out. You literally can't get any more diversified than this. So the world index fund I use is called VWRP. It's the FTSE All World Index. This index has 95% of market capitalisation around the world. So essentially this covers 95% of the world stock market. So by owning this index, you are owning the world, literally the world stock market. And the average returns of this do vary from when you would buy, but generally you would say 7 to 10% return over the long term. Obviously things go up and down. But yeah, I always think if you're wanting to get started investing in the stock market, then there's no better place than an index fund. There's always risks with index funds as well. People say they are not risky. Yes, they are risky. You invest in the stock market, you could see a 20-30% drop, and that would be normal at some points. But over the long term, if you invest for 20-30 year period in index funds, you're going to do pretty well. I would always say you need to do your own research as well. It's all great me saying this, but you need to go and research what index funds are and why they are a good investment for people starting off investing. I always think as well with index fund, it's a good way to get into good habits. So like you would each month when you get paid, you will put some into a savings account. It's a good way of, automatically saving, so you can have a standing order direct debit to your ISA, and then you can invest into your index funds. Vanguard will do this automatically. Freetrade, you can do standing order, then do it yourself. But the process is the same. It gets you into good habits, monthly investing, and then if you have a long-term mindset, within 20-30 years, you can do it on a compound interest calculator and get the average results of the world index. And go from there. But I'm going to be using a world index in my portfolio for the long term. A good portion will be, I think at least 20-25% will be of my portfolio. So myself, I will be using index funds to grow my wealth. So there we have it. They are my main tips for beginner investors in the UK wanting to invest. This was mainly related to the stock market, and this is because most people who want to start invest will probably want to invest in the stock market, and it's where I have the most experience, so I thought it was most relevant. I have my friend Ryan Derry, who has also got his free tips for beginner investors, and I believe Ryan's got a few words, so let me pass you over to Ryan.
Hi there everyone, my name's Ryan, and if you want to catch the other top 3 tips that you need to begin investing as a beginner, then make sure you jump over to my channel to catch those tips. So I'll see you all over there.
Thank you very much, Ryan, for that. Please go over to Ryan's channel, and I've left his video with his free tips below. Please check out his video and give it some love, share it, comment, like it, subscribe to him. Ryan posts some great content, and I really think you'll enjoy his video. So thank you very much for watching. Please like, comment, subscribe, and I will see you in the next video.